الذي أرسل رسوله الذي أرسل رسوله بالهدى ودين الحق ليظهره على الدين كله وكفى بالله شهيدا أشهد أن لا إله إلا الله وأشهد أن محمدا عبده ورسوله أما بعد. Praise to Allah who has given us uncountable blessing and mercy so that we can be here on the international webinar to celebrate the 6th anniversary of WaCIDS. Salawat and salam to our beloved Prophet Muhammad sallallahu alaihi wasallam, who has guided us to the right path and showed us to the beauty of Islam. Honorable Dr. Listiana, as the founder of WaCIDS, distinguished speaker, Dr. Al-Mannai, PhD, and to all the participants, welcome to the international webinar of WaCIDS with the topic of exploring the corporate Waqf framework insights from Islamic moral economy and finance. Before we start, let me read the agenda of today's webinar. The first agenda is opening. The second, welcome speech from Dr. Listiana as the founder of WaCIDS. And the third, a webinar from Ms. Muna, Dr. Al-Mannai, PhD. And then the next one is question and answer session, and then followed by the closing remarks from the speaker. And then the last is photo session and closing. To start this webinar, let's recite Basmala together. Bismillahirrahmanirrahim. And in the next agenda, we're going to listen to the welcoming speech by Dr. Listiana as the founder of WaCIDS. Dr. Lisa, time is yours.
Thank you, Dr. Farokhah. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Rabbi shrah li sadri wa yassir li amri wahlul min lisani yafqahu qawli. Alhamdulillah, all praise to Allah, the most merciful, who already gave us the opportunity to join this room to learn something new for us, and also salawat and salat to our beloved Rasulullah sallallahu alaihi wasallam. Hopefully, we can be part of those who receive the shafaat in the hereafter, inshallah. And I would like to welcoming all the participants that are already joining the international webinar, and also Jazakallah khair for our distinguished speaker, Dr. Al-Mannai, for giving her precious time to sharing with us about the one important topic that maybe some of us already familiar with, and but we have not explored much about the corporate Waqf. And hopefully, actually, this session can be part of our continuous effort to make more people aware about the Waqf, and that I'm realizing that Waqf is not about the social activities, but it also can be part of the next level that can give more social benefit to the society. So I really welcoming all that may be the first time to joining the agenda or program of WaCIDS. Actually, this is our third international webinar. Last few years, we conducted it regarding the Islamic gift economy and the Waqf. And the second, we discuss about how actually to implement Waqf in the Maqasid methodology. And in this third international webinar, we will learn a lot about the how it's actually we can explore the corporate Waqf framework. Maybe in Indonesia, most of the Waqf asset is still in use in the social activities, and maybe not a lot of the corporate they already involved in the Waqf activities. So hopefully, some of the participants they also managing the Waqf, and or maybe having a corporate maybe can later on consider to involve in the integrate this the corporation and the Waqf can work together. So once again, I thanks a lot for Dr. Muna, and let's learn together, inshallah. I return to Sister Farokhah. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Dr. Lisa, for your speech. And then now we're going to go to the next agenda. Now, yeah, we're gonna listen to our speaker to talk about the topic exploring the corporate Waqf framework, insights from the Islamic moral economy and finance. But before we start, we would like to ask to all the participants to fill out the polling that that you can see on the screen, yeah, on the Zoom. Yeah, we're gonna have a polling about Waqf, regarding the Waqf. So to all the participants, please answer the question. It's just 3 questions. Yeah, so you can fill out all the questions before our speakers today present their presentation. Okay. From the committee, is it ready? Okay. We can wait for that.
Is it appear on the screen? Is it already appear?
No, not yet. Not yet. Okay, it's already showed on the screen. So for all the participants can participate to answer the questions. Yeah, it's about the corporate Waqf, about the topic today. There are 1, 2, 3, 3 questions. Yeah. Okay, while we wait for the others. So in here, I would like to introduce our distinguished speaker today. Yeah, I would like to read his brief CV of the Dr. Al-Mannai. So she has over 20 years of experience in the field of finance. Her initial years were in Qatar National Bank. However, her extensive experience were working on the Bahrain financial market regulatory environment at the Capital Market Supervision Directorate for the Central Bank of the Bahrain. And then her expertise spans from the issuance, corporate restructure, and investor protection, ensuring the listed companies comply with all rules and regulations, to the market surveillance, investigation, and enforcement, addressing non-compliance and contraventions. She has also worked on developing rules, regulates, and aims to transparent securities market. And then following her thesis research of investigators' rights, transparency, and information in Islamic private equity and equity-based Islamic finance, and then she developed a keen interest in the Waqf, as Islamic endowment. And she believes that it can play a significant role in enhancing entrepreneurship and economic sustainability. And currently, Dr. Mona is an adjunct lecturer at Qatar Finance and Business Academy, QFBA, at Northumbria University, to share her work and research experience with her students, because she believes in the importance of combining academia with industry experience. So that's the short background of Dr. Mona, which was a very impressive. Yeah, and we cannot wait to hear. We cannot wait to hear her insight and experience. Yeah, and now about the corporate Waqf framework, insight from the booth, Islamic moral economy and finance. And for Dr. Muna, time is yours. Yeah, it's around 45 minutes to present your presentation. Thank you.
Okay. I'm just a second. I've actually got on, but I'm trying to get the share to get to the. No, hang on a second. Let me just start. I think I need to share and then open up.
Yes.
Yeah. Just this. I'm trying to get to open the, I've lost you as a big screen on my,
It's okay.
That's okay. I'm going to share my screen now. So just
Yeah.
a second. Oh, hang on a second. Yes, so can you see the screen now?
Yes. Yes.
Yes?
Yeah.
Yes. All right. So yeah, I'd like to Bismillahirrahmanirrahim. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatan min lisani yafqahu qawli. Thank you for the invitation and thank you for the kind introduction. I would like to talk to, this is a topic that is dear to my heart, and I'd like to share whatever I have sort of so far to explore, found out with regards to corporate Waqf, and I'd like to share this with the audience. I will start with getting an overview of the, giving you an overview what Waqf in general is, and then it's sort of align that, moving on from the traditional to the corporate, and then aligning that with the Islamic moral economy. Then we sort of touch on a bit on the means of finance and like with regards to the financing strategies and investing. I mean the funding methodology and investing strategies. I'd like to, this is the main point that I would like to share is a real world example. And then after that, we will try to look at the benefits and challenges. So initially, there were these questions I wanted to sort of get feedback, which were the poll questions to see your input. Hopefully, we'll be able to see what your thoughts are. And then following at the end of the presentation, before we move on to the questions and answers, I would like to see sort of, ask them again and see what are your thoughts, whether they're still the same or they have changed. So starting off with the Waqf in Sharia terms, in simplest terms, it's the confinement of the assets and the release of its benefit. So there are four main elements that needs to be with regards to Waqf to be able to be in line with Sharia principles. You have the founder, which is the Waqif, and he's the one that renounces the ownership of an asset for the use of good use. And that asset then that he's dedicated is called the mawquf. Once he's actually dedicated that asset, then it's documented in a Waqf deed, which is Saql Waqfiyya. This is an important document, even more so in today's kind of framework, because it sets the governance, the terms and conditions, how he'd like to manage those those assets, who are the beneficiaries, and so forth, and so long. And whoever is then appointed to manage those assets needs to abide by those terms, so long as they are in line with Sharia. And then you have the mawquf alayh, and these are the beneficiaries who are going to benefit, and they can be sort of either sort of specific, which is sort of certain individuals or a certain group, or it can be in general, like for a certain cause. So these are the four elements. Then you have, when you go to, and there are multi-purposes to it. I mean, the first one that we are all aware of, the first kind of three waqfs were, the first one being the Masjid of Quba, which was built by the Prophet, peace upon him, sallallahu alaihi wasallam. And we also have heard of the land that Umar bin Khattab gained from after the Battle of Khaybar, and that he put that as a waqf for the use of structure of the land to be benefit for the people in the community. So sort of it served a socio-economic purpose. And then we also have the well with Uthman bin Affan purchased due to a shortage in the community with regards to water. So they was looking into their welfare. So it's not just a sort of a religious purpose. There are multi-uses. It has multi-uses. It's been used in different perspectives. Its reach, it has been, I mean, They've established in different forms. You've had real estate properties, they've been cash, grains, and seeds. You've also been, it's been established in various, with regards to, you're looking at, like we saw the mosque, we saw the land, agricultural land, we saw the water fountain. There's also been hostels, schools, libraries, hospitals. I mean, you name it. It's in the past, I mean, during the Ottoman Empire, 75% of land and buildings in Turkey were all Waqfs. In the mid-19th century, there was up to 50% of land and building in Algeria that was all Waqf. And then if you go on to the early 20th century, 40% of the cultivated land in Egypt was all based on Waqf. So the Waqf transforms societies and enabled them to grow. Okay, but what happened with time is that the sort of, due to some mismanagements, then the authorities and the government took over, and then you had unclear motives with time. Political came in and I mean, you had some people used it to their own benefits, like the returns that were generated, they were not going to the actual beneficiaries. Governments were misusing, and so the movement from the private to the public, it lost its sort of direction, and so the people working on it, there was their motive due to the unclear motivation. Then they lacked interest. There was lack of interest and lack of care, and so they started to become unproductive, and you didn't even have new ones that came that entered sort of that sector of Waqfs. Nobody was people were hesitant to actually set up Waqfs. So then what happened was that due to the mismanagement you had and the misuse and inefficient use of resources, you then also had the capital went down, so you couldn't actually even maintain the ones that are existent. So these are then also the other issue that also affected the continuous growth of an impact of Waqf was a misconception. There was this I mean, till today, people think that Waqfs can only be movable assets. They can only be real estate properties. And not everybody does have those. And the other thing is they take it as being a religious matter, and it's like, you know, like how you do your zakah and you've done it and that's it, and it's a once-off kind of donation or so forth. And but the thing is, it's not sort of kind of a ritual, but more of it's a servitude. Because it's part of, I mean, if you look at it as part of servitude and part of development, then you're applying the principle of succession of the planning, then man's succession to this earth cannot be achieved except through advancement and development in all aspects of life. And that's what Waqf was doing in the past. So if you go from that principle, then it's no more just a kind of a religious matter in that domain. It moves towards that this is something that is part of your life and a purpose that you actually can work on. There are different types. There is the khayri, which is the benefit for the social public good. Then there is the ahli, which is just for the sort of family members and your descendants. Then you also can have the mushtarak, which can be it's like for the benefit of family and the public. The thing is, one thing also to note that the ahli Waqf, like you will see also through the example, is not, I mean, it's not an ahli Waqf, but in any case, when you have an ahli Waqf just for the members of a family, indirectly that also serves the community, because by maintaining the financial wealth or the health of your family members, you actually then becoming independent, and they don't have to sort of get to the state of needing to beg or ask. And then that will also increase their purchasing power, which will feed into the economy. And from a business perspective, whatever the business that they've worked on and generate the first generation or second generation has worked on and built, it doesn't get sort of lost and mismanaged and through inappropriate spending. And the people who are employed in those organizations maintain their employment, so they also continue, their families can grow, and the community, and as such, the community's well-being is maintained. So indirectly, even Dhurri and Ahli Waqf do benefit the economy, not just the Khairi ones. So that brings us, so that just is of a simple, quick overview of Waqf as a Waqf. Now I sort of move into transit into between what is actually from the tradition, which was, like I mentioned, is basically fixed assets, land and buildings, to what we keep hearing in the more recent years, the corporate Waqf. Basically, it's referred to as corporate because you're using it's in relationship to allocating shares and shareholding in companies. So the corporate Waqf is like you're confining a set of shares or the profits that are generated from a company, and the dividends. The founder actually confines these and dedicates the use of instruct of those shares that he has actually renounced in perpetuity for the benefit of whoever he wants to benefit from it. And then, so the founders can be individuals, shareholders who own these shares, institutions, companies who own shares. Either they own these shares, or they, I mean, in a sense, but they're not within. It's not their company, or it could be that it's their company, and what they do is their portion of their equity or their share of it, they're actually announcing it. And that's what's happened quite a few. Examples is that, like the founders, like you have here, and the one kind of the few popular ones you have is in Turkey. It's as early as the 1920s. In 1926. The Koç Foundation, Wahbi Koç Waqf, the founder actually, his wealth, he actually donated his wealth to the foundation that he created. And then through time, other members of the family did so, and the foundation manages this wealth, and accordingly, then it actually allocates the income that generates from those shareholdings and assets to the beneficiaries, like into the community, to develop, depending whether it's educational or they want to a medical research and so forth, whatever they decide. The same thing with Sabancı Foundation. It's a big family group, a company, holding company, and initially it also started with a member family donating all their fortune to it. And then with time, the generations that followed, they've allocated certain percentage of their ownership in the holding company to the foundation. And accordingly, and then the foundation then sort of distributes that to the beneficiaries, in a sense, either individual or group of people or sector, depending on whatever whoever the founder, when he established the foundation, what was the purpose and who would be benefiting from it. You also, another example you have is in that was at the Hamdar Laboratories Waqf Foundation. Excuse me for the pronunciation. But that's an interesting, it started through 3 generations. The first generation was established in India, then the second generation established in Pakistan, and then the third generation established in Bangladesh. That's due to the split of India, the country. But then it's like each generation developed it in all those different 3 countries. So all these 3 countries have created the foundation. And basically, it's a herbal pharmaceutical company that was established by the first generation. So in a sense, the net profit that would be transferred to the foundation, and then those funds will be used for social and public interest, who are being the beneficiaries. Then you also have in Malaysia, this is more of a state-owned. A state-owned enterprise. They allocated shares from from the different enterprises that they have to the benefit of social good and interest, where they have actually then those shares that they've allocated, like they've established Waqf al-Noor Corporation, and accordingly then the returns from these ownership allocations would be used for social and public good, being the beneficiary being the social and public. So this is sort of an example of the corporate Waqf we keep hearing about in the recent years. Now I would like to move on to what I would call more of a contemporary corporate Waqf, and which we'd like to walk towards. It's basically regarding establishing a corporation, an entity, so it all depends on the company commercial law in each jurisdictions and what is permissible. In some jurisdictions, Waqfs are still under the government kind of authority. I mean, everywhere they are, but like in Malaysia, I think you need to take permission to be for you to actually be managing your own. But say in Saudi now, they have started in a sense an agreement between, there's an understanding between the Awqaf, the Ministry of Awqaf, and the Ministry of Commerce, for them to be able to establish entities so that they encourage this sector so that it can actually contribute to the economy. And so if in the most common that we know, company setups that are suitable for this kind of framework is the limited liability company, the joint stock company, the closed one, and then of course the holding, which can be any either a limited, which will have companies of limited liability and joint stock companies under it. The idea of establishing a company, a corporation, it's a legal entity. By doing that, you're actually separating the business entity from the owner. And then this business entity can enter into contracts, own assets, incur liabilities, and then it's independent of the owner. Which in that way, it brings in flexibility, because with Waqf, if the assets are confined, there's a limit on how much you actually can do with it. In a sense, if it deteriorates, it's very difficult to sell or replace. You would need to always go back to the judicial courts just to get the permission to do so. So when you separate you make a legal entity and you separate you make it a business entity and you separate what it owns from what its capital, then you actually it gives you no more. The asset belongs to it's part of the company's investments rather than being part of the capital of the company. I mean, I will explain as we go along now. So if we look at limited liability, with regards to ownership, each deed is a legal entity. So once you've registered, these legal deeds, once they've registered with Awqaf, you then go to the Ministry of Commerce, and then you register it, and once it's registered, it has this legal entity status, and then the number of deed that needs, or legal entity, because each deed will be a legal entity, depends on the requirements of company commercial law. In some jurisdiction, for a limited liability is a minimum of 2. The most recent update in Saudi, it used to be 2. Now they've actually reduced to 1, and there was a cap of 50. Now they've removed the cap. But so depending on if you say the 2 or 1 or more, whatever for a limited liability requirement, you need to have 2 members or 2 partners. Then accordingly, that's the number of deeds you would need. So and each deed will be a legal entity. So they will form they will form the company. The relationship will be separate. You separate the financial liability from the Waqf. So the Waqf is the legal status. So the Waqf now owns, and it's not. So you've established the entity, and then what happens is that the management can then appoint as the supervisory board, which is Majlis al-Nadara, and they will be like the board of directors kind of thing, and then you will have the management. So your deed will actually tell you who will be part of the Majlis al-Nadara, and accordingly, when you come to set up this company after you've registered with the Ministry of Commerce, they will take their position and they will be appointed. They will be considered the board, and they will appoint management. This type of investment is good for a multi-diverse investment that are sort of medium-sized investments. So depending on whether you go for a limited liability or you go for a joint stock company will depend on how the size of your investment and how diversified it is. Then the same thing, I mean, if you look into the joint stock company, it also depends on what the law requires, in a sense, how many you need to actually establish a joint stockholder company. And each shareholder each deed will become a legal entity and will act as a shareholder. And the same thing, what will happen is that once that is established, you will separate the financial liability from the Waqf itself. And in the deed, whoever have been appointed as being the Majlis al-Nadara or the supervisory board, they will then take the sort of the role of the board, and they appoint the management. And such joint stock companies are good for, like, when you have, it's a diversified investment and you have many different fields, and they are large investments, because a joint stock company will allow you to they would need if you have large investment, you will need a large budget, and accordingly the joint stock companies will be a better than a limited liability. Now I think when they've removed the restrictions from a limited liability, then that's probably maybe okay. But depending, like I say, how many is required with here, there's no sort of restrictions on how many members and shareholders, so you can increase the capital. How it's established with regards to it's either an existing commercial company that exists, and the owners are either individuals or entities, and what they will do is that they will renounce their shares. And once they renounce their shares in this existing company, then what would happen is it will become a Waqf company, and the Waqf deeds that they created through their announcement will be the owners. Or you can take, or it can be like you have a few Waqfs, and each Waqf will be registered as a legal entity, and together they will come together and they will establish a joint stock company. And the holding company is basically either, like I mentioned, it's either limited liability or it can be a joint stock company. In a sense, it will sort of, it's a holding, it will hold those companies under it, and it will manage those companies and as subsidiaries. So by establishing, if we worked based on the principle that company owned by endowments is not considered an endowment entity, but an independent commercial entity with a legal personality and financial liability, in which the endowment owns the shares, whether it's partial or full, depending on its capital ownership, then the entity can transact, and what it owns in line with the objectives of which it has been established, without the need and permission to go to the judicial board or an authority. So the Waqf owns the shares in the company and not the asset of the property itself. And the company's assets are independent from the Waqf assets. So when such established, whatever assets that were there at establishment, fine, they're the property of the asset they probably could be under confinement. You could you can invest them and so forth, but they're under confinement, and you're restricted with regards to the decision you make, unless the Waqf deed specifies and gives you the allowance to be able to maneuver also with them. But then what you could do is that once you've established this corporate entity, you can then gift investments, and that can be developed already existing entities that you want them, you want them to be sort of part of this Waqf. The purpose of it is that you want it for development, so that to avoid being confined. Once you've established this Waqf entity, this company, corporate Waqf, if you gift it, it no more falls under confinement. But what happens is it's part of the assets of the company and not the Waqf assets. And then whatever shares or investment this company that you established through the Waqf deeds purchases now is also part of the company's assets and not the Waqf assets. So then you can actually have the flexibility of how you decide with regards to how you manage your investments and how you transact. And so if we compare the traditional Waqf with the corporate Waqf now, you will see that the traditional Waqf doesn't have this commercial status, whereas the corporate Waqf does, because once it becomes a corporate entity and it's independent from the actual Waqf, the owner of the Waqf, it becomes commercialized, and you can actually deal with it as like you're with a business, dealing with a business entity. You can, with regards to asset developments, you can do investments where the traditional Waqf, usually what happens with the returns that they generate, they just purchase more real estate properties or more of whatever in assets they have. The risk adaptability is low with corporate because it can adapt to your time. So if the economic conditions are not so good, you can sort of balance your investments and your dealings. While with traditional Waqf, you're at high risk because you don't have that the ability to maneuver, and also the type of assets you have. This is also asset freedom. They're all related in a sense, because it's on the traditional format. Whatever assets you've actually put up to Waqf and even donate, it's always under confinement. Whereas with the corporate, whatever you donate to gift and whatever it purchases going forward, it's free from confinement. But at the same time, the legal deed can actually specify, like, these assets that I gift for Waqf. What would happen with them is that a certain amount needs to be like grow. The Waqf needs to grow, and a certain amount needs to be part of the asset of the Waqf assets rather than company assets. So it's all in the deed itself, and how you actually make it. And accordingly, they will need to abide by those instructions. The governance is that when it comes to a corporate Waqf, you are then obliged, you fall under the company commercial law, so you will need to oblige by those the regulations, in addition to the Waqf provisions and regulations that exist. But at the same time, this is kind of an enhancement, because it will overcome any mismanagement that what we've seen in the past. They will need to be kind of reporting. They would need to be kind of overcoming conflict of interest issues, and it's because it's going to be run like similar to a normal company, and all these requirements that are required on those certain type of companies, whether it's a joint stock company or limited liability, will need to apply. And with the traditional Waqf, it just is in line with the Waqf provisions and regulations. So this enhancement that you get from the company commercial law, and once it's registered as a legal entity and needing to abide by certain issues which will affect the management, in a sense, an oversight is lacking. Especially if you're talking about businesses that they're going to grow, and they're going to, if you give them the flexibility to grow and open up and invest and transact, then this enhancement being under the meeting the company law requirement it's a benefit. And now, of course, you're creating a legal entity from the Waqf, from Waqf, and you're creating a sort of a company, but then it also will differ from the commercial companies. In a sense, your financial liability, okay, with regards to Waqf, it can only be capital associated, so it's limited to the share, you're limited to share capital. In commercial corporation, it can extend, you can have a capital or personal association. It can be partnership or a capital injection. So with that's the difference. With Waqf, it's only share capital, and the ownership in Waqf, it can be endowments, entities owned by endowments. Whereas with commercial, it's either endowment, can be companies, governments. But with Waqf, they need to be either a group of endowments or an endowment, an individual endowment, but it's all endowments. So you once you decide that you're going to be you're going to put it up to Waqf, you will then need to have a Waqf deed, Saq al-Waqfiyya. Once it's registered with the Awqaf, then you will take that to the Ministry of Commerce, and that will, the Waqf deed itself will register and will create you a legal entity. So you only they are as owners, have them as owners, whereas in the corporation and the commercial companies, normal commercial companies, it can be companies and governments, also other entities. With regards to capital, like I mentioned, it can only be capital associated. In the commercial aspect, you can have different types of companies, which can also have a personal involvement, it can be a personal association. You can have partnerships or people of or services contribute to the capital of the company. The General Assembly is taken up by the board, supervisory board. Whereas with regards to commercial companies, the General Assembly, depending on the type of company, are attended by the shareholders or the partners. And when it comes to the distribution of the returns, the dividends, under the Waqf corporations, they would go to the beneficiaries that have been allocated in the or mentioned in the Waqf deed, and in the commercial entity, it will go to the shareholders or the partner, depending on the type of company. Okay, now coming to link that with the Islamic moral economy. If you look at the definition, a definition of an Islamic moral economy, it's an approach to and a process of interpreting and solving the economic problem of human beings based on the values, norms, laws, and institutions founded in and derived from the source of Islam. So what we're saying is that, simple terms, you're looking into solving economic problems and human needs using institutions and resources in line with Sharia principle, which of mu'amalat and akhlaq. So if you come to align that with the corporate Waqf setup, with the corporate Waqf, what you're doing is you're actually you're preserving the wealth of entities, of people, of individuals that they've actually worked for and earned, and you're endowing you're preserving the wealth, the wealth that generations have been working on. And then when you establish it, it also preserves the wealth by actually trying to grow those funds using professional business framework and people who actually who are professional and have the skill and expertise to do so. And when you have enough funds, you can then allocate those funds to solve problems of human needs, because you can't. In order to solve problems, you need the wealth of the finance, and which need to preserve and grow in order to have to source. Using institutions and resources, you're actually mobilizing resources to permit economic enhancement. You're mobilizing it from those who have, to those who don't have, and you are using institutions that are there and that have been in the economy, giving to the economy, and you are mobilizing the resources they have to different sectors that you want to reach, to enhance, to sort of allow economic enhancement. And of course, you are actually dealing, and you're going to be transacting in line with Sharia principle, being a corporate Waqf. So you're also attaining social and economic solidarities, because you're actually keeping communities, members, individuals together. And you are allowing also for small endowments to get together and establish a bigger legal entity, and you're forming larger endowments through combining those small ones. Okay. So now, with regards to funding and investing for corporate waqfs, I want to touch on briefly because it will vary, and the thing is, it's all there are professionals who work on it. But as in simple term basis, when you're looking at funding methodology, you need to decide on the funding basis that a funding base that will not be affected by volatility, the different changes in the market, because whoever you're funding, you will then they'll be relying on your funds as to be part of their budget. So if the economic conditions are not so good, and then your whatever you generate from those investments that you're investing or how you've run your business will affect whatever you're going to be their financing, their budget. So in a sense, you need to decide a basis that will be less affected by volatility. I mean, so any income will change. If you say it's a percentage of income, whatever I generate, a percentage of that will be going to the beneficiaries. Then if economic conditions are not so good, that can get affected. But I mean, there's also the suggestions that it could be a percentage of your asset. So if that was less likely to be volatile, affected as income, and the percentage it will depend on the size of your asset. But it's good to know, like say the usual is like between 3 to 5% or even less. But it, like I said, it depends on the size. So depending, I mean, 3% of a big big size asset portfolio is not as much, is different than when if it's like 1%. I mean, if it's a big portfolio, 1% will be will have an impact. If it's a small, maybe the size might be different. Then and of course, like you need to have a regular review on your methodology, like every 3 to 5 years. Then because you need to see the market, you need to see how well it's been, and how effective it is. And then accordingly, you will do your review. You will review with regards to the percentage rate. You will review on the basis, depending on with the experience you've gone through. The same thing similarly, when it comes to investment strategy, to build your portfolio of assets, you will look at the different types and different periods, different terms, and different risk. And accordingly, you will decide on a percentage range, like I will allocate, and it can be like you're looking to financial instruments, fixed income, shares in local market, developing markets, emerging markets, real estate funds, could be Islamic contracts. But so you'll go from like a conservative to opportunistic. So the portfolio, and accordingly if you're going to say like fixed income, the range will be like, depending how much, if you say you're 10 to 30 whatever percent, so you have a range of which you will minimum be and a cap, and accordingly then whoever works on the investment they have kind of a range that they can work on. And so the same thing, you will have to, it's good to have a regular review to every few years to sort of look back and see what change you need to do with regards to the strategy, and accordingly adjust. It's not, you can't keep it perpetual because the market changes everything and conditions change, but you can't keep changing it either. So you sort of you have a procedure at a process where every few years is part of the procedure that the methodology and the strategy gets reviewed. In the real world examples, I've touched on, I mentioned, like we've seen Turkey, we've seen the one that between the 3 generations from over 3 countries, and in India, Pakistan, and Bangladesh, and I've touched on with regards to Malaysia. In my personal view, I would consider them a social entrepreneurship waqf model rather than a business orientated. Because what they have allocated their funds, their equity ownership from wherever the organizations or their group of companies into a foundation, and which manages those funds and accordingly then sort of channels it to the beneficiaries. The example that I would like to now talk about and touch about, and it's an example in Saudi, to me, which if I compared this setup, the framework that I'm going to talk about, to the framework of the previous slide, that's where I would say this is more of a business orientated, and that's more of a social orientated. But you will see now, although it's more business orientated, it can also contribute tremendously. So it's in the Kingdom of Saudi Arabia, and apparently there are many families that actually have similar setups, but they're not known. It's not sort of, don't read much about it, and there's not much in the public domain. So this is in the public domain because the founder himself wanted to set precedents so that people will start actually this sector, this type of, he wants to set precedent and encourage this form of kind of waqf and participation with regards to your giving back. So what he has is this, it's Sulaiman al-Rajhi, Sulaiman Abdul Aziz al-Rajhi. He was a forward thinker, and I mean, what he did was, prior to 2011, he distributed his wealth. He started from nothing, and then he built entities that actually formed part of the economy, contributed tremendously to the food security in Saudi. And so what he wanted to do is he wanted to distribute the wealth between the family, and at the same time he wanted to gift. So he did, he gifted a few, and that he set up a few waqfs, but then he was still, and what he distributed to his family, he sort of, as per Sharia, he then put it under a holding company so that they can manage this wealth. And he separated and he created waqfs for some of these entities, for those that he wanted to renounce as waqf. But then he still had this concern, like I mentioned earlier, this rigidity, which will not allow things, the waqf to adapt to time and changes in the market conditions, and which will affect decisions. So through consultation, he came up with this setup, in a sense, to set up a holding company, and that will have that will then be the legal entity, and accordingly, and then whatever companies he has that are investment companies that actually are generating and contributing to development can go under the holding company, and then accordingly they will not form the assets of the waqf, they will form assets of the holding company, yet the intention of it is to perpetual renouncement. So he then, accordingly, what he did, establish a waqf deed, and then all the terms and conditions of the waqf deed went into the Amendment Articles of Association. He established the holding company, because then once it's registered with Awqaf, then you go to the commercial, to the Ministry of Commerce, and you set up the Waqaf entity, after which then the assets or the companies that he wanted to gift, he gifted to the holding company. And then what happened, and then this holding company becomes the investment arm of his social arm, of the whatever social sector he wants to develop. So as per his setup in simple form, if you look at it, he had a very, very detailed waqf deed, the company, he has one of the social arm organization printed this experience of this book, and that accordingly you can actually get to see it. As per that, the setup is that there's a supervisory board, which is Majlis al-Nadara. They've been appointed to manage, and it includes Waqf authority members, and the thing is, up here they keep an eye to make sure that everything is as per the deed, but at the same time, their decision or their involvement in decision making is limited, in a sense, only to what to make when it's needed, and not like in other waqfs where they will have full authority in the decision making. Everything needs to go back to them, but they are not excluded. They are part of the board, because you need this oversight. And you have an investment arm, which is the holding company, and a social arm. And this investment arm is independent of the Waqf and the Mawquf, okay, that he's created. This investment arm will be the source of funding for the social arm, and under the social arm you have two. You have a charitable organization and you have the non-profit companies. And these non-profit companies, why it's separate? Because these entities that they create, they would need to be like it's the universities. We will see some of the examples later. They need to be resourceful in a sense that, because that's where the competition and motivation happens. Because if you don't want to rely completely on somebody on somebody, and then there's no interest to develop and progress. But at the same time, you don't want to have finance your main worry. So the thing is, you're not profitable. You don't have to worry about finance. You will get a budget. You will be financed by a certain budget. But at the same time, you need to be generating some kind of profit. But your objective is not profit. Your objective is like developing education, whatever and so forth. You have a different objective, but at the same time, you need to be kind of this resourceful and not completely kind of act as a charity. So that encourages motivation and development. And also then you have charitable organization, and this charitable organization, what it does, it provides grants and funding to other charitable organization or causes. So the investment arm, you will have the holding company, Al-Waqf Sulaiman Al-Rajhi. It's a legal entity that owns the different companies that he's gifted. And then accordingly, those gifted companies that the holding company supervises and manages are free from confinement. So if you look at now these examples, these are the subsidiaries like 100% owned. Then they invest in companies where they're sort of more of close to being major or high ownership in those companies. And then they have other sort of normal small ownerships in other companies. But these are companies that are very well developed. This is a poultry company, organic agriculture, into agriculture. This is into poultry, and then this is sort of real estate and finance. He has four main sectors: finance and real estate sector, and then there's a food and agriculture sector. There is an industrial sector, companies under that sector, and then they also have education and technological sector. What those companies, when he first initially started his companies, before they became Waqf, his main purpose was to work on economic and food security, so and try to service the economy at the time. And these companies grew to that they actually play a big role in the company, especially the poultry company. And the way he works with his businesses is that he diversifies, and when the diversification takes place with regards to complementing the different businesses that he's in, like because being in the poultry and then the eggs, then he developed the factories where they produce cartons and egg trays. So it's like when your diversification is always sort of complementary in most of the time, so that it can grow. This is so you have food security, you have industry. This is the technology, and this company works on it's international, invests internationally, and what happens? I like it. If I go to this slide, with regards to these are different areas of businesses. It's into agriculture, infrastructure development, plant tissue cultures, farming management services, irrigation systems. They are into renewable energy, trading, manufacturing, logistics. These entities have grown and developed with time. So some of them are companies that have been established for years, and some of them have been established after the holding endowment company was established. But they try to serve the communities as well. They're over 7 countries, and when it says here crop production and processing and livestock, it's kind of they try to develop communities at the same time. Say, for example, it's like they have one in Sudan, the entity set up, and where they actually work there with as part of they have date processing plants, livestock fattening, greenhouse cultivation, tissue cultural laboratory. And what they do is that for the communities around there, they help them to develop their livestock and their agricultural plantation lands. So they would try to improve on their seeding and the tissues of, and at the same time help to provide the livestock for them. They come to an agreement with them that they will purchase those products or the livestock at a certain price. So they know what they can then actually work on breeding them and growing their land, and so they're knowing that there's somebody who's going to buy the crops or buy the livestock, and so they offer them services that will complement and help develop their business, and at the same time those communities also grow. What in the Waqf deed, one of the clauses does state that if any companies that they have, if they're like, especially in the agriculture and livestock, and that deals with food security, even if the returns drop, they need to maintain those entities. So it just shows you that it's not completely business orientated. There is this social aspect, but at the same time, you have a business you manage it in a business framework. So this is, and then you have the social arm, and like I mentioned, the nonprofit companies is the Sulaiman Rajhi University, which is sort of mainly they have it's medical, nursing, and business. It offers these two different colleges, and it offers scholarships. And what they do with their scholarship, you can get scholarships, you can get grants where they reduce your fees if you are above, your achievements is above 80%, you can get 40% reduction in fees. If it's below 30% to encourage education, you still get a reduction, and you can get a grant for 30% reducing your fees. And you can also, there's an educational fund that provides students loans. If you're studying medicine up to 11 years, if you're studying other than medicine, it's 9 years. So it's fees. You pay fees, but you can get scholarship, and you can also grant, and you can get a student loan. Then you also have the S.EI for Waqf development, and they work on publishing researches and publications related to endowments and sustainability. And that's where their book on the Sulaiman Rajhi experience, they shared his experience by publishing one of the publications. Now, with the charitable organization, they have M.Si Sulaiman Rajhi. It's a kind of a foundation, a charitable organization, and also which is separate, and it has another separate entity, that the Sulaiman Rajhi Waqfiyya Foundation, which deals into mosque and managing mosques. The charitable sector grants, they've changed, and the most recent pooling is support basic needs. And they strengthening values and identity projects, empowering charitable sector, empowering women and families, relatives, quality projects. If you have certain projects that are of quality, like can help enhance and develop, they also provide grants, and of course for Hajj and Umrah and mosque. And these they open the window where you can apply. Everything is online, and they have these applications, these policies, the procedures, their criteria, and then they announce that their window for when grants are open, so that you can apply. And then accordingly, it is not based on individuals, it's based through a committee and through a process where then they will decide on who is applicable for these grants. Now, as of in the year 2023, there were a total of 574 projects, amounting to a total of 18 million. Sorry, there's a apostrophe missing here. It's 18 million, just over 18 million US dollars. That's just in 2023. That's just the charitable grants that they provide. which doesn't, in addition to the communities they've built, in addition to the contribution they've given to the economy. If you look at it, it's where it's differentiated is that you have an investment environment. You work on creating and integrating investments through your diversification and complementing as you diversify. You then also provide, which gives you the highest return both economically and socially, because you're generating high income because of the investment you're making and how your business, you're running your business, and at the same time socially, because you're going into communities where you actually help develop those communities at the same time, and you provide, and you're developing research. Like say if you're working on, you have tissue laboratories and you and cultural tissues, you actually then are developing also research. You then also work, so that's where you're developing also economically, socially, and community. Then at the same time, it's all working towards sustainability, not just locally, even overseas. So this is what the main where it makes it different. Now, looking at benefits, I know I passed, but I'm close to being ending. The benefit is that you have an investment system that focuses on sustainability development and benefits communities in which they operate. You're preserving economic stagnation. You're preventing, economic stagnation, because there's continuation. There's no sort of, there's beginning a business that needs to be run. You're improving fund management because you're having professional people dealing with it. But at the same time, you're maintaining a kind of a stewardship and servitude mentality. And you're becoming, you're working towards being a productive community, a productive society, rather than a dependent one. So that's the benefit of it. And at the same time, it's all in line with the Islamic moral economy. Now, coming to my last slide, this is where the challenge lies, is that do you need to increase awareness that it's not fixed, it's not from being fixed, from being religious. You look at it, okay, if it's religious, look at it from the perspective of servitude. You're actually you have been your duty, your purpose on earth needs to be to work to develop this, to develop and to encourage advancement. So this awareness, a mental awareness in a sense with regards to many religious it's part of your servitude, your purpose in life, and at the same time it's no more just into fixed assets. Then you need to have a supportive framework that needs to be also developed. Like not all jurisdictions you can actually move out of Awqaf. Some jurisdiction like government or Awqaf have a strong hand, and there's this flexibility that you can actually create different entities. And a lot of families, wealthy families, I mean, they actually, maybe they want to, but they don't because of this rigidity and hold. So some of them, like in some families that I've heard, have like a legal kind of a letter on the side that says what this establishment is for the benefit of so and so, rather than actually officially putting it in a stock and then registering it, because they're scared of the hold that the government authority will have on it. And at the some of them say that they worry that concerned that they might change their mind. But we need to work on a framework that will support this, because as you've seen, his Waqf, it's all in the Waqf deed, in the Sak al-Waqfiyya, and the more detailed you have that, the better it is, because it covers all aspects. But so you would need to have a framework that will cover all these things, these issues, so people can it's like when you have the regulations, the company law offers you a set of template, a framework for your articles, and accordingly you just update that. So the similar thing, it needs its own framework. And then in the idea of it's an enterprise, it's a company, it's a legal corporate entity, it needs to function. That if you understand that and you move it from being a social, I mean, foundations are there, it's good and fine, but then you're then still in the social mentality, which brings us to the social sector. It's still stayed, I mean, keeping it under the social charity sector I have concerns of if we keep it there, how far we can actually develop and progress, because you will still have this mentality that it's a charity. And accordingly, with charities, you will need to treat them differently and work differently. The innovative part will not develop. There's this idea that, okay, even in regulations, like in the company commercial law, sometimes they would consider it as a non-profit entity. But then in a sense, because it's being under non-profit, it can accept donations. If it was not labeled under non-profit, it might not be able to allow it to accept donations. But then that's why we need a supportive framework. Maybe we should have its own framework under the commercial law. A subject on a chapter on its own. But this time will let us tell us. But we will not develop. It will not develop. The concept will not develop if we keep keeping it under the charity sector. That, in my personal opinion, because I've seen this, looking at this example with the Rajhi and the tremendous benefit it has done. It has a social charity arm and it has a business arm, an investment arm. And in the charity you've seen, there is this charitable organization, there's a non-profit. Because once it becomes charity, the innovation and motivation drops. So with that, I end, and before I actually move to the questions, thank you for listening. And before I go to questions and answer, if we can have the poll questions again, and so that we can compare between what your point of view earlier on and after listening.
Okay, thank you so much, Dr. Mona, for your very insightful presentation. So here after this, we're gonna have a question and answer session. But as you mentioned before, so we're gonna have another polling session. Yeah. So please, for the committee, maybe we can start for the polling first. Yeah. And after that, we can you can show the result. Yeah, compare before and after the presentation. Okay, so for all the participants can fill out the polling. Yeah, it's just a 3 questions. Okay. And for the question and answer session, for all the participants that want to ask the question, can raise your hand, yeah, through the Zoom, yeah. And also, you can also type your question in the chat box. Okay. So maybe we're gonna have 2 minutes, yeah, 2 minutes to wait for the participants to fill out the polling. And then after that, for the committee can share the result from the polling. So Dr. Muna, thank you so much. Well, it was a very insightful presentation. We got a lot of new knowledge regarding the corporate Waqf and also the schemes. Yeah, the schemes from yeah, because in Indonesia, there is not many example of the corporate Waqf. Yeah, corporate that also can yeah, can have a function, a charitable and also profitable one. So from your presentation, I think we can get what is it, like yeah, insight, so that in Indonesia we can also implement the schemes, yeah, that already be done there. Yeah. Because actually in Indonesia there are so many Waqf corporate, Waqf institution, yeah, but yeah, not many of them become like a corporate Waqf. And
Hmm.
here we already have a question. Yeah, a question from Mas Iskandar. Yeah, Iskandar Ibrahim. Maybe, yeah, I think let's just start the question and answer while waiting for the polling. Okay, so please, Mas Iskandar, can ask your question.
Yeah, thank you very much, Ms. Farokhah. Thank you very much for Dr. Muna Al-Mannai for your presentation. That I found it very interesting. So you provided a very well structured explanation about the corporate wakaf that has been practiced like in Turkey, Malaysia, Pakistan, and you also explained very detailed how corporate wakaf like Sulaiman Al-Rajhi has been established in Saudi Arabia. But as has been mentioned also by Mrs. Farokhah, that in Indonesia, we don't have a lot of corporate wakaf. So I'm a little bit curious about the participation of corporate to establish the wakaf. So in your point of view, so how corporation can be encouraged to participate in the corporate wakaf initiative, how to establish the wakaf. So is there any kind of incentive or strategy that you found to be effectively can be effective in increasing corporate to involve in this wakaf? Thank you very much, Dr. Muna.
It's the thing is, like you say, is how to get to encourage cooperation. And it's like in the last slide I mentioned, it's through awareness. You need to increase the awareness, because unlike if we don't, without the awareness, you're not able to you're not going to proceed. And that's one of the reason Sulaiman Al-Rajhi established one of his charitable organization setup is the non-profit one was publications, where he encourages research to publish research that have been written on endowments, and at the same time with anything on sustainability. So it's just through increasing awareness. In addition to, it could be if through even the wealth management services. In Saudi now, they're having offices where they actually offer you the service, so that then you can actually, and to encourage you to participate, like renounce a third of your or less to make it into kind of a waqf. Sorry, I'm trying to find my screen. That's why you've seen me jump from one to the other. So yeah, it's awareness, because like not everybody is aware of it. And the ones we're more familiar with is when you allocate a certain percentage of your share, and then what you do is you put in a stock fee, and accordingly then it gets registered, and then the returns from those shares automatically go to who is managing it. Or they set up a foundation if it's a big amount, and then this foundation manages it. You manage it through your fund, whatever you are allocating. And that's what you'll keep hearing internationally. But the other one, like Sulaiman's Rajhi case, there isn't much, and it's only through increasing the awareness, the contribution. These companies have grown, and demonstrating how can they still grow yet and benefit both the people involved and the community. It's all into awareness, and that's why one of the main reasons that actually motivated me to actually talk about him, because I recently, 2023, there was a book published, and it talked about endowments, and the thing is, it didn't mention anything on the Saudi case. And this is supposed to be one of the recent kind of waqfs. So which showed me that this is maybe because it's all in the Arabic language and people are not aware of it. And so this made me to want to actually share Sulaiman's Waqf, waqf setup. and framework, so that it's part of the increasing the awareness. And I think it's just through awareness more than anything else, and demonstrating the benefit, the all-round benefit to everybody.
Okay, thank you so much for Dr. Mona. Mr. Iskandar, is it enough?
Yeah, thank you very much for the answer.
You're welcome. I know I didn't get to tell you much, but that's the whole reason, is that there isn't much to say in a sense. And like I say, you need to, some countries, it's not going to be easy to actually implement, because there's no understanding between the Ministry of Commerce and the Waqf. It's all under the Waqf, and they have a say, and they supervise everything. And because Saudi has decided that it wants to be this community to contribute towards sustainability and their 2020-30 vision, accordingly, they've come to this understanding. If that wasn't that, if they didn't want to contribute, we wouldn't have seen this understanding, because you've always, in the past, there's always been, they don't want, and Al-Waqf doesn't want to let go because of the mismanagement that's taken place in the past. Some are doing a good job, in a sense, trying to doing their best. Some are not. They're not that effective. But still, their limit of innovation is limited. So with regards to, and people are not going to have built all these their wealth or companies for many years, 40 years and plus. Let go of them to people who are not experienced, and to them to manage. The whole idea is to preserve it. So that's what he did. He put some of them in the Waqf, but then he had still this concern. So then he decided, okay, how can it be a Waqf? I mean, I will renounce its perpetuity, but at the same time, I want to still maintain that business strategy. Sorry. So the thing is that whatever I renounced earlier, I will create the entity, from them legal entities. They will be confined, but then the others that I have that are also great contributors, I will gift them to this company, so they will become the company's assets. And yet, but at the same time, he's renounced them as Waqf, kind of. So it's just it's in a very, very innovative way of thinking, and I think through that, then they've started to in Saudi try to develop that area, and they have accordingly the limited liability and the joint stock company liability. Their restriction on the number of shareholders or members have changed. They issued they made an update in 2023, which was effective in 2023 company law, and to actually encourage that this corporate Waqf. So it all depends on each jurisdiction, and at the same time, it has to be, I suppose, if on a national level, in a sense, because if the law doesn't allow it, then you will not be able to do anything. But for the law to go down that road, the government to go down that road, you would need to, if their awareness increases, then they would actually be this will open doors for them to open and discuss, because they would know that this also will contribute to the economy and will reduce the pressure on them and the public finance. And they would also need to be aware of it. They need to sort of, their eyes need to be open to these successful stories. I have here is corporate Waqf has a clear fatwa guidelines that express it does and done. For example, if the cash Waqf invested in a form of shares, could we have the risk of losing the money? There are, I mean, I'm not a Sharia scholar and all so forth, so I'm sort of more business orientated, and I try not to be pulled down too much with the Sharia, because if you do, then you're going to, I feel you're going to restrict yourself. But the thing is, if you know the basic outlines, and you know how you can maneuver, then yes, I mean you're not kind of safe enough. So there's always fatwa guidelines, and I mean, you will not do something that's not permissible. I mean, that's just a simple answer to that. There's fatwa on cash, and there's fatwa on shares So that's you're safe in saying that I'm dealing in a safe area. And the losing of it, like I say, it depends how on the Waqf deed and how restricted it is and how much you've been allowed to be able to replace it. And as much as you can, the thing is, you with the cash, you would buy something, and then the cash is the Waqf, and what you bought is what is going to be generating the returns.
Okay, thank you so much, Dr. Muna, for answering by your own. You read the question by your own and then answer it. And for the other participants, we still have time, I think. If you have a more question, okay. Dr. Lisa, want to ask something to you?
Yes,
Okay, please, Dr. Lisa.
yes, Jazakallah khair. Thank you, really, Dr. Muna. This is the second time I listening to your presentation regarding the corporate Waqf and the Sulaiman narrative, and for me, it's still really an inspiration. Last June that I hear about because true that in some of the, mostly in Waqf literature, when it called discuss about the corporate Waqf, the most example is the Malaysian experience, the Farokhah. So the Sulaiman narrative, maybe we need to share, I believe also some of the participants here are lecturers, so maybe they also can share the success story of the Sulaiman narrative to their students, because I will do also, inshallah. So thank you so much for this. Actually, I have one question regarding the, is there any because actually the holding company is Waqf, is there any kind of difference in the way of to do the risk management between the conventional, the ordinary corporate with the corporate Waqf? Maybe in the case of the Sulaiman Arashi, because maybe he do something different, or it is the same way it's the other corporate or company.
Sorry, can you repeat that again? The last.
Is there a difference treatment in doing the risk management when it is a corporate Waqf and where other is not the corporate Waqf, the corporation as usual?
The holding company just kind of acts as it manages and supervises in a sense to make sure they report to one, and every entity then does its own sort of decision making and so forth. And they're all bound by the Waqf deed. But the Waqf deed has been specific with regards not more than a third of what they generate goes to redevelopment, to reinvested, to growth. After you're removing your costs. So in a sense that it doesn't go all to invest, and then the beneficiaries don't get much. So what they do is that one of the conditions in the deed was that it doesn't exceed a third. A third of it goes to after removing expenses, that you can use that to reinvest and grow the investment, so that doesn't degrade. But at the same, and the rest goes to the beneficiaries. The other thing is also set is that you need to create a reserve fund. Okay, that's also on the deed. You need to have a reserve fund, so when in need. Also on the deed, what you have, like I say, it's all in the writing. The other thing is in the deed is that you allocate a certain amount to the charities, and if these amounts don't get used, you don't immediately invest them long term. You invest them in short term. Okay, because that allows you if there's any sort of unexpected cause or humanity or charity that needs it, what will happen is that you can easily liquidate it. But then once that amount reaches to the average of the last 3 years that you've actually of spending for charities, then you would need to move it from the short term to long term. So these sort of certain guidelines have been set. So the companies that they're independent in the way they work and perform, but they need to keep this in mind. So the holding company there sort of supervises that they're in line with that. And then it depends on the type of business you are in the sector and how you make the business choices you make. And the focus is you need to develop communities, you need to develop an economy, you need to contribute to so the food security is a very important thing to I mean elevate communities on that aspect. So the risk management, there are sort of certain guidelines that they would need to keep, and maybe it's not as free as like any other entity, but other than that, they can manage it professionally what they think best.
Thank you, Dr. Muna.
You're welcome.
All right. To all the participants. Any questions before we go to the next agenda? Okay, maybe the last one from me.
Yes, go
Dr.
ahead.
Muna, yeah. I
And
just
then I'd like to know the
curious.
results of the poll of the
Okay.
questions.
Yeah, yeah. I curious, I really curious about the corporate Waqf in maybe in Qatar or in Arab countries. Is there many corporate Waqf that already been implemented and been successful, such as this, such as the example that you gave us?
Like I said, in Saudi, when someone I spoke to, I was surprised to hear that he says Sulaiman al-Rajhi, I came aware of it because of the book he had actually written. Okay, that made me then investigate and look into all the different companies. And then if you look into them, then you sort of there's not much published in a sense, but at the same time, certain places where you can find that that is a Waqf, and it's only through reading his story that I actually would be able to work back. I found out that then when somebody told me there are many other family companies that in Saudi, I then tried to go and do some research recently and look into them, and then you could see if you look into, because it's not a public company, so not all the details, the ownership details will be public. So, but if you get hold of some reports, you can then see a Waqf forms a certain big percentage of their equity, of their group holding. So they've allocated like 7% of their group holding to be held by a certain Waqf company. And if he had not opened my eyes, I would not known. But in Qatar, a few years back, when I was interviewing somebody for my PhD research, and although it wasn't in Waqf, but I was talking about families and their whether it was because I did it on private equity. I was surprised to hear that some of them established entities for the good cause, but they put it in a legal writing, but it's not registered with Awqaf. Like, because I mean, that's talking about what, more than 8 years ago, because and they don't want sort of the government or the authorities to put hands on it, and then they don't have the flexibility to make in the decision making sort of thing. And the businesses that they've created for years and worked on, you don't know how it might get mismanaged. Now, I think there are some of the countries like Saudi has been seeing, maybe after seeing the successful story of Al-Rajhi, by the way, if you look at, if you hear the different stories, here they are very professional. They have, and they keep improving on their professionalism. They have like procedures, policies for everything. Like they are a really, really sort of professional entity, and they don't consider themselves as a charity organization. And they try to abide with all the sort of international standards of being like a business, investment, professional business company. They got their they did their research work on sort of well-known foundations overseas, and based on the performance of these foundations and how they actually strategized and how they developed, then they took what suits them and implemented it to the regards and came up with this framework. And that's how they develop the procedures and make the decision making. Especially when it comes to investment, the way they invest or they fund, they take their methodology and strategy based on the others' experience. And it's just a matter of awareness. They have started to see that this sector can contribute to the economic development, and accordingly, you've seen things change. There are some jurisdictions, even in the region, that has not opened up as Saudi with regards to Waqf. they have not the communication or the coordination beyond extending out of the Waqf authority is not sort of extensive.
Okay, thank you so much. Yeah.
You're welcome.
Yeah, so maybe in Indonesia we haven't found a company like Sulaiman Al-Raji that's with a complex business and also charitable company. Yeah, but I think as a researcher, as Waqf researcher, in the future we can like do more research. Yeah, and try to dig one company to the others. Maybe we can find one maybe one company that that maybe like close to become like corporate
Yeah,
Waqf.
it doesn't have to be as big as
Yeah.
Salman Rajhi, but
Right.
the concept itself, the framework that you can have business entities
That's
that
right.
can, it doesn't have to be a holding company, but business entities that contribute. So if you have a stock deed and you make it a legal entity and you establish a company, then you can then donate assets to it or whatever it is, and that company can grow. But in a sense, it grows as a business or within a business-oriented framework. And it serves economic development, social development, whatever it is. It's not sort of, I'm not saying not profit orientated, but profit to serve humanity, profit to serve community kind of thing.
Yeah, that's right. We really hope so. Yeah.
Inshallah.
Okay, inshallah. So for all the participants, I think this is the end of the question and answer session. Yeah, so we're gonna move to the next agenda. Yeah, the next agenda is closing and the photo session. But before that, I think we need to hear, on the closing remarks from the Dr. Muna, please.
I would like to see the
Oh, yeah.
polling question results
Okay.
so that I can give you my remarks based on that.
Oh, yeah. Can you see it? We already shared the result on the
I
screen.
can't see the results, no.
Oh,
I only see you are viewing your quiz results. I only see the questions.
oh, you see
It
the
says that you're
question.
viewing the quiz results, but it's only the questions, no results.
Yeah, I think so. Maybe someone can help this.
I mean, if
Oh,
you
what-
just put them in the chat or just let me know the before and
Oh.
after.
Oh, yeah, before and after. Wait, I think we need to stop sharing first.
Maybe Sister Ira would like to share the screen, the result of the poll.
Yeah, but on the
Okay.
current view is just the previous one, right? The last
Yes.
one, the last polling.
Uh,
Can we compare to the first one?
I think Dr. Mona should be a co-host so you can see the result.
Like I say, the results come to me. I have the question, polling corporate Waqf questions, and I have the questions, but it says results, but there's no results. Okay, now I can see. All right, so
okay.
now I can see.
Yeah. We solved the problem.
Yeah, thank you. So prior, it's interesting. The first question, that's where the mark is that if Waqf was part of the charity sector, 90% considered yes. And then after the sharing my experience, the example, I have 10%. So that shows that we're going in the right direction. I mean, no, I mean everybody has their own opinion. Can Waqf act as a financial instrument? Yes, definitely. That was in the beginning, but it's reduced. Why has it reduced? That's interesting. Then can Waqf play a part financial business? Part of financial business? Yes, and that's reduced. I don't know whether it was a misunderstanding or not, because it does play an instrument. Because if you think about it, it's a financial. I mean, it's the financial tool. It's a sourcing. Islamic finance is to finance within Sharia principles. So Waqf, by preserving the wealth, it's actually sourcing the business sector, is sourcing the social sector. So it's a form of financial instrument. I mean, okay, you're talking about it as an entity, but this entity is actually, you're using it as an instrument. You're through the concept of perpetual wealth preservation and sustainability, it's able to source you your whatever you want to source. So maybe the understanding that it's a corporate and it's an entity, so that's not an instrument. No, I'm not saying no. You're using it in an to function as an instrument. Let's say, okay. That's my that I want to just sort of adjust that understanding. The other thing is Waqf part of the Islamic financial business sector? The interesting, it was before was yes, 85%, and then no at the end. Interesting to see what changed, but using it as a financial instrument, Islamic financial instrument, you're then also participating in the financial business world. So my closing remark is that that's where we need to develop how we look at things, and from the different perspective, so that if we change the way we look, we will then be able to advance more in this with this instrument and innovate. At least we have the understanding that it's after this webinar, that it's not, as they don't consider it as a charity under the charity sector, which is good, because that's what I'd like to move out of, in a sense. You can call it the third sector, because it's neither on this one or this one, but at the same time, labeling it as charity, I think will affect innovation, us innovating in that area. And when I say innovating, I'm not saying that we play around with Sharia. No, I'm just saying is that we live the time of our era. We are contemporary. And if you think about it, that's why Waqf doesn't have so much specific conditions. Zakah has. Other issues do have. But in the Quran, it's left it open. In a sense, يعني لن تنالوا البر إلا أن تنفقوا مما تحبون. So, but it's left it to you to actually be able to adapt. So how you spend, and it's a form of spending. This, if we and it's not sort of, even I don't think Sharia has restricted it to being a charity sector. It's social, yes, welfare maybe, but not in a sense a charity. Yeah, and that's my closing remark.
Okay, thank you so much. Once again, thank you so much for Dr. Muna for your very insightful presentation here. Regarding regarding the corporate Waqf framework, so that Waqf can go to the next level.
Inshallah.
And that can give more and more benefits to the society while securing the asset Waqf and the Waqf become beyond the charity. And dear all the participants, the next agenda is the photo session. So to all the participants, please open your camera to take a picture together. Okay. So please, for all the participants that can open the camera, please open your camera so that we can see your beautiful and handsome faces. Come on. Come on, the others. Okay. Yeah, it's okay. It's okay. Now let's take picture in 3. Yeah. 1, 2, 3, pose. Okay, once again, because there are 2 slides. Yeah. 1, 2, 3. Okay. So thank you so much, for Dr. Muna. Yeah.
Thank you for I mean, for giving the opportunity and with this invitation to actually share this example. And yeah, thank you for listening.
Yeah, thank you so much. And also for all the audiences here. Yeah. And to end today's webinar, let's end this webinar with reciting the Hamdalah. Alhamdulillah Rabbil Alameen. And for the last I say, Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
See you on the next webinar, everyone. Thank you so much,
Thank
Dr.
you so
Mona.
much, Dr.
And
Muna.
thank you. Thank you all for attending.
Yeah, we really hope to see you on another opportunity.
Inshallah. Thank you.
Thank you.
Terima kasih Mbak Faroh, Mbak Ira, Mas Iskandar.